Good morning, everyone. I'm Isaac from BCL, and this is your market update for Wednesday, the 1st of October. So, starting with the US dollar index, at the start of the week, the index leaped below its 50-day moving average, trading at 97.7. The sentiment was weighed down by the concerns over a possible US government shutdown as the end of September funding deadline draws near. A failure to pass a spending bill would close government agencies just as the new fiscal year begins on October the 1st. And historically, the dollar tends to weaken before a shutdown, but often rebounds once the issue is resolved. And this time, however, the risk is higher. A prolonged shutdown could even delay key economic data, including the Friday's non farm payrolls report. And on the policy side, the markets are pricing in about 40 basis points of the Fed cuts by December, and as much as 110 basis points by the end of next year. And technically, the index faces several nearby tests. The Bollinger Band at 97.69, Fibonacci support levels around 97.676 and 97.17, and the 97 round number. A break below 97 would confirm a trend reversal. And on the upside, the key resistance lies at 98.62 and the 99 round number. Moving to WTI crude oil. The oil prices fell below $63 a barrel on Tuesday, extending earlier losses. The traders are weighing prospects of increased supply and the possibility of a ceasefire in Gaza. Reports suggest OPEC may approve an additional 137,000 barrels per day of production for November. And meanwhile, exports through the Iraq Turkey pipeline have resumed after more than 2 years, easing the supply constraints. And on the geopolitical side, the US President Trump and Israel and Netanyahu signaled progress on a US peace plan for Gaza, though Hamas has not agreed. Trump added that Israel has his full backing if the plan is rejected. The potential US shutdown also raises concerns for demand. And technically, oil failed to sustain last week's high near 66.2 and is now consolidating. The resistance lies at the 5-day moving average at 64.13, the 50-day average at 63.94, and the 50% Fibonacci retracement around 65.6. The support is at 61.87 with a deeper floor near $61. Turning to spot gold. Gold pulled back sharply in Tuesday European session after setting a fresh all-time high of $38.71 per ounce in the morning. The prices dropped as much as $74 to $37.97 before rebounding to $38.60. While some profit taking is at play, the safe haven demand remains strong and expectations of Fed easing and geopolitical tensions. And from a technical standpoint, the 14-day RSI remains deep in overbought territory above 80, but the bullish momentum is intact. A resistance sits at 3875 and 3900, with the big 4000 level as the next target if momentum continues. And on the downside, immediate support is at 3800, followed by the overnight low at 3785 and then 3750. And last but not least, the Australian dollar. The Aussie dollar extended gains on Tuesday, marking its third consecutive rise. Support came from stronger Chinese PMI data and firmer commodity prices. The RBA left rates unchanged at 3.6% in September's meeting, as expected. And China's manufacturing PMI improved to 49.8, slightly better than forecast, while manufacturing dipped to 50. And domestically, Australian building approvals fell more than expected, but the Aussie held firm, revisiting the key point at 66 level. And technically, Australian dollar continues its rebound from 65.21, and momentum indicators show strength, with RSI attempting a cross above the midline. Resistance is seen as 66.28 and then 67.07, while the support rests at 65.21 and 64.83. So that wraps up today's morning analysis. Keep an eye on the developments around the US funding deadline, the OPEC decision, and the Middle East geopolitics. All remain key drivers of the volatility. And trade safe, and I'll see you in the next section.